Hey there, and welcome to This Explainer. I am so thrilled you're here today because we're about to dissect something truly fascinating. We are looking at the ultimate blueprint of government accountability in Nepal. We're going to break down exactly how an entire nation ensures its public funds are managed, tracked, and totally secured. We're talking about the anatomy of a transaction, specifically demystifying a crucial document known as the Voucher. Now, just imagine the vast machinery of a national government for a second. Millions of rupees are moving every single day, right? Paying salaries, funding massive infrastructure projects, collecting revenues. It's a literal web of financial activity. But where does it all actually begin? Like if you walk into a government office, what is the absolute first step that turns a real-world event into a codified, legally binding financial record? How on earth does the government ensure not a single rupee goes unaccounted for? Well, let's dive right into this. The answer to that question is the Guswara Voucher, which translates to the journal voucher. Basically, this is the initial double-entry record that gets prepared the exact moment a financial transaction happens, whether that's an expenditure, a revenue collection, or a deposit. You can kind of think of it as the DNA of government accountability. Before money can formally exist in the national ledgers, it absolutely has to be born right here on this document. I actually love this quote directly from our source material because it's just so definitive. It says, "The Goswara Bachwara is the starting point of accounting and reporting." It really is just that simple. Without this initial starting point, the entire financial reporting system simply wouldn't exist. There's no way you can have bank cash books, budget sheets, or any kind of national economic transparency without first accurately filling out this exact voucher. Okay, so here's our quick roadmap for today's explainer. Number 1, a foundational intro to the Goswara Voucher. 2, we'll look at Section 1 for administrative details. 3, Sections 2 and 3 covering core accounting. 4, Sections 4 and 5 covering payment authorization. And finally, number 5, its impact on other accounts. Let's jump into Section 1, the foundational intro to the Goswara Voucher. So, the Goswara Voucher doesn't just record a transaction, it actually legalizes it. It's the thing that ensures any economic activity falls perfectly within the confines of the law and the approved budget. It acts as an uncompromising shield against fraud or irregularity. Basically, by acting as a rigid internal control system, it holds officials directly responsible for their actions. It guarantees mathematical accuracy right at the source, which, let's be honest, is the only way to promote true financial transparency. So how exactly does a single piece of paper do all of that? Well, let's build a quick high-level mental map of the form's architecture. The Goswara Voucher is systematically organized into 5 distinct sections. You can think of it in 3 main chunks. First, you have the administrative metadata at the very top. Second, the core accounting, math, and narrative story right in the middle. And third, the payment execution and accountability signatures down at the bottom. Moving on to Section 2 of our agenda, which covers Section 1 of the form, the administrative details. All right, here's what you'll find in this very first section. First up, the office name, establishing exactly which government entity is initiating the action. Crucially, you also have the budget subheading number. Our source material actually notes that separate vouchers must be prepared for different budget subheadings, and they literally have to be numbered sequentially, starting right from number 1. You'll also see the type and number of the voucher, the date, the transaction number, and way up in the top right corner, its official designation, the Auditor General Form Number 203. Now, what's really cool is that these fields are standardized across all of Nepal, meaning every single government desk looks at this exact same layout. All right, Section 3 on our agenda, Sections 2 and 3 of the form, which is all about core accounting. Now, what's genuinely fascinating about how this system is designed is its strictness. Section 2 is the literal mathematical heart of the voucher. It operates on a very strict double-entry system. This means every single action has an equal and opposite reaction in the books. It is where the financial classifications, funding sources, and ledger entries are precisely specified so that the national ledger balances out perfectly. Let's break down the specific fields of this mathematical heart. You've got your debit and credit indicators, alongside the expenditure head number and name. It gets incredibly detailed here, requiring activity and component numbers, a ledger folio number, plus a breakdown of the source details. That basically means identifying the primary and secondary sources, exactly which entity is bearing the cost, and the exact method of payment. You have your debit and credit columns, and to prevent any tampering with the numbers, the total amount actually must be written out entirely in words. Every single rupee has to be accounted for right here. Just to give you an idea of how this math plays out, let's look at the debit versus credit rules. When an expense occurs, the related expenditure head is debited, and the payment bank or treasury single account is credited.
If a government employee takes an advance, their personal advance account is debited. Then, when they clear that advance, it gets credited. And deductions, like taxes or provident funds, are properly credited to their respective accounts. It's a beautifully logical flow of funds, really. Right beneath all that intense math is Section 3, the narration. This is simply where you write a brief, concise explanation of the transaction. If Section 2 is the math, you can think of Section 3 as the story. It's there to ensure that years later, an auditor looking at this form understands exactly why those numbers were moved in the first place. The context is never, ever lost. Section 4 on our agenda, Sections 4 and 5 of the form, focusing on payment and authorization.
So Section 4 of the form is the execution phase. Look at the strict requirements here just to ensure the correct entity receives the exact authorized amount. You need the payee's name, their permanent account number or PAN, the exact bank name and branch, the specific bank account number, and of course, the payment amount. This level of detail guarantees funds are routed directly and securely to the intended recipient. There's no, oops, I accidentally set the national infrastructure funds to my cousin's account happening here. It leaves a flawless paper trail. And that brings us to Section 5 of the form, which is basically the shield of accountability. This is where physical signatures legally bind officials to the transaction's validity. You have three very distinct layers of oversight here: the person who prepared it, the person who presented or submitted it, and the higher-ranking official who approved and authorized it. For every single one of them, you need their exact name, their designation, and the date. This structure prevents any single person from unilaterally moving government funds. Finally, Section 5 on our agenda, the Goswara Voucher's impact on other accounts. Let's take a step back and see how this builds the entire national financial infrastructure. The Goswara Voucher absolutely does not exist in isolation. It's the raw data that feeds directly into the bank cash book, that's Form 209, which keeps track of daily cash flows. It feeds into the budget accounts, and ultimately it aggregates all the way up into the national financial statements. It's literally the core building block of the entire public sector economy. Take the budget sheet, OAG Form No. 28, for example. The source material outlines that this sheet has three main sections: budget, release, and expenditure. If you ever want to know if a government department is overspending, you check this sheet. But the catch is, this sheet is entirely reliant on the data captured in the initial Goswara Voucher we just analyzed. Every single entry on the budget sheet traces right back to those Section 2 debit and credit columns. When you zoom out, the broader ecosystem benefits of this primary voucher are just massive. It allows the government to accurately reconcile bank and cash balances. It actively prevents budget misuse and overspending because, well, funds just can't move without budget clearance. It aids in tracking unsettled advances through Form 211. It heavily simplifies the final auditing processes for the Auditor General. Ultimately, mastering this primary voucher is absolutely crucial because it drives systemic financial discipline across the entire nation. Before we wrap up, I want to leave you with a bit of a provocative thought. Think about the intricate chain we just explored. If a single error sneaks past those three signature lines in the fifth section of the Goswara Voucher, how might that mathematical flaw ripple out? It would hit the bank cash book, distort the budget sheet, and eventually misrepresent the entire national financial statements. It really makes you appreciate the incredible strictness of government accounting, doesn't it? Thank you so much for joining me on this explainer. Keep learning, stay curious, and I'll catch you on the next one.